Welcome everyone. Thanks for joining the first chapter of my new YouTube project, The Financial Independentist. In today's episode, we will be discussing a little bit about HIMS and HERS company, why the stock has taken a hit recently, and whether it is a good buy or not at its current valuation. If you like this content, please make sure to hit the like button and subscribe right now. It really helps the channel grow and you'll even get better content in the future. Please also leave some comment below regarding this topic or how we could improve future content. Feedback will be most welcome. Alright, let's get on to it. You've probably noticed a sharp decline in HIMS stock price shortly after earnings. There are two main reasons why the stock has been beaten down. First, somehow the market didn't seem to like too much the Q2 earnings, something I honestly find difficult to understand. And second, market overreaction on the recent stock selling by the CEO Andrew Dudum. The first one we see right away after the earnings, a sharp decline from around $62, $63 to the $51 level, and then the second one, which basically was the sale from Andrew Dudum from 51 all the way to a very low of 41. Now it seems to be recovering a little bit, but still struggling to go above $50 per share. On the second point, we recently read that HIMS and HERS CEO Andrew Dudum recently sold $33 million in stock after a massive rally. As per the comment, sale was motivated by tax and philanthropic purposes. Now let's take a look at all the insider sale operations in HIMS stock in the last month. Outstanding is the one from Andrew Dudum on August 7th, in which he sold 660,000 shares of the company at $50.58. You could argue that, Andrew Dudum was trying to rip off profits from shareholders by selling a big amount of shares, but then I would say, well, why he didn't sell above $65 per share? The company has been above $65 per share for more than 2 weeks before earnings. So what was Andrew Dudum doing? He was waiting for, the market to overreact on the last earnings and then sell at a very high premium, or he just sold for some other reasons. You don't know. I don't know. All we can say is there is only one reason why insiders would buy shares of the company. There are many reasons why insiders would sell shares of the company. I will not be speculating on the reasons underlying of this sale. However, what's really is important for me is this value. This is the number of shares that Andrew Dudum still holds on the company, which by the way is larger than before, right? So it's logical for me to see that still Andrew Dudum is heavily vested in the company, right? 9 million shares at $50 per share is more than $450 million in the company, right? So you could argue that potentially someone like Andrew Dudum may have 90 or 95% of his net worth stacked into HIMS stock, and maybe he wants to do some redimensioning, right? Instead of 95-90, okay, let's do some rebalancing, and then let's put 90% or 80% in HIMS stock, and then the other 10-20% in some other assets, right? I would do that. Even if I'm super bullish with my company, it's good to have a little bit of diversification. So my take is this is not as negative as the market is saying, okay? Now for comparison, here I'm showing also the insider sell moves on a company as popular as Netflix, also in the last month. As we can see, there's also a lot of sale operations in Netflix, right? So why don't we also start selling Netflix? It's very normal to see executives and CEOs and whatnot to sell shares of the company. They receive a lot of shares periodically. RSUs, stock options, PSUs, you name it. They're getting a bunch of shares pretty much every single month. Okay, some of the sales are automatic for tax purposes. Some of the sales are strategic. Hey, I may want to buy a big mansion. Sure, maybe that's not strategic, but you could say, well, I want to buy some other assets, right? And then diversify. Should we sell Netflix stock? We shouldn't. And the market is not selling Netflix stock. Although Netflix, you see people are still selling a bunch of shares. Sure, okay, the number is lower, but also the price per share is also much higher. So this guy, for example, he sold more than $2 million in this sale. All right, so now let's take a look into the main motivation why I think the company has been tanking too much after earnings. I would probably split into two main reasons. One is number of subscribers, flat, quarter on quarter. Second is revenue down quarter on quarter. These are the two main things investors have been complaining about HIMS in the last 1 month or so, right? Tanking the stock. Let's start on the first one. Well, first of all, 89% personalized subscriber growth year on year, right? From Q2 2024 to Q2 2025, 0.8 million to 1.5 million. It's crazy, right? And we need to keep in mind that the personalized subscribers are the ones that are more stuck into the HIMS business model. Second, it's true that the revenue was down quarter on quarter, but it's been up 73% up year on year from Q2 2024 to Q2 2025. That's from $316 million up to $545 million. That's crazy, right? That's like $230 million between one quarter and the other one next year, right? So why the revenue is down here quarter on quarter, right? What was their motivation? Well, first we should be taking a look with a little bit more of perspective, and we see that the revenue was substantially high, right, from Q4 2024 to Q1 2025. A lot, right? $100+ million up, right? And then it's just giving back a little bit on this quarter. Mainly why? Because now the FDA has declared GLP-1 and semaglutide not allowed to be compounded at will. That is fine. I think that was starting March or April time from 2025. So obviously Q2 has been impacted in that sense. But even if that's the case, the company still achieved a very strong revenue number of $537 million. Now, in comparison with Q1 2025, which is what I'm showing right now, obviously this was a flawless execution, right? The subscribers were up quarter on quarter, obviously up year on year, both personalized, both non-personalized. The revenue per user was up without any flaw, and then quarter on quarter was up, right? So this was an ideal earnings scenario. Obviously, everything is triple the growth, the number of personalized users, a number of dollars in revenue is also triple it up. Obviously, this was an amazing quarter, but we need to understand this quarter. It was a little bit amplified by non-core items in HIMS. That's the main motivation, and that's the main thing I was trying to transmit before. HIMS was getting extra benefit from the FDA semaglutide GLP-1 allowance for compounding. Now it's only allowed for medical purposes, and that's why the number is a little bit slower, and then that's why the company was down quarter on quarter, still up 73% year on year. Okay, now let's take a look at the top line in HIMS stock. This is the way I like to see companies, which is on LTM, last 12 months. So the company in March quarter 2024 in revenue was $959 million. If we take 4 quarters forward into June 2025, now it's in $2 billion, right? This is LTM, $2 billion revenue LTM. That's crazy. This is crazy. Now, if we look at the gross profit, $790 million in Q1 2024 LTM. In June quarter 2025, $1.5 billion. That's 2x the value from here to here. That's crazy. Now, gross profit was 82%, down to 76%. Management already said that as they go investing more and more and more and deploying more and more verticals, gross profit is going to decline. And it's probably going to decline to around the 70% or something like that, which is reasonable. Now let's take a look at the bottom line in HIMS. And here we can see very interesting patterns. Well, first of all, we see that the company was not profitable in March quarter 2024, again, LTM. And now HIMS is highly profitable in June quarter 2025. So not only revenue was doubled from $959 to $2 billion, not only the gross profit was doubled from $790 to $1.5 billion, but now the company is profitable, both at operating profit and as net income level. Okay, and that's besides HIMS losing a little bit of quarter-on-quarter revenue because, as we said before, GLP-1, semaglutide, compounding. Okay, if we look at the bottom line, it's very, very strong. Now let's take a look at the Q3 2025 guidance from management. In the revenue front, they guided from $570 million to $590 million, about 45% year-on-year growth. Very strong. And for the year 2025, they guided $2.3 billion to $2.4 billion, midpoint of $2.35 billion, around 60% year-on-year growth. Also very strong. I don't like too much these adjusted EBITDA numbers, but it's good to see that company is profitable, around 12% approximately margin. So that's reasonable. The point I'm trying to make here is $2.35 billion revenue, right? Expected for a year, and weight loss revenue of at least $725 million. That's 30% of the revenue. So what about the other 70%? Is nobody talking about the other 70% of revenue? Well, there's a lot in the company besides weight loss that nobody cares, because the company moves based just on weight loss. We'll be talking more about HIMS in future videos, and how this other 70% of the revenue is actually the most interesting part of the company, and how the company is going to be growing a lot, because there's a lot of growth drivers for the company. Now, on the weight loss revenue of $725 million for a year, Bank of America is effectively conceding that HIMS will obliterate its fiscal 25 weight loss revenue guide of $725 million. In fact, they're now modeling $850 million in weight loss offerings in the range 2025 to 2028. That's huge. And let's say that 2027, 2028 is potentially a placeholder. I don't think there is really any estimate as of now. Now, let's look at the different offerings HIMS has on weight loss. And we find the following three. First, generic liraglutide, injectable doses at an average of $2.99 per month. Second, generic oral weight loss pills at a much lower price of $69 per month. And finally, what everyone is talking about, compounded semaglutide at an average price of $1.99 per month. From all these three offerings, only the compounded semaglutide is made out of patented formulation and compounded for specific medical reasons. This is the offering that Novo Nordisk is trying to block, as it competes directly with their own offerings, Wegovy at $4.99 per month, and Ozempic at $4.99 per month as well, which are currently losing market against Lilly's Mounjaro, which by the way is very expensive, at $9.99 per month. It is worth noting that all that HIMS is doing is perfectly legal and covered in FDA 503A pharmacy regulation. For 2030, HIMS management is getting at least $6.5 billion in revenue, which compared to fiscal 25 guidance of $2.35 billion, represents a 2.75x growth in the top line in just 5 years. That's equivalent to a CAGR of 22.5%, which is very achievable given that they are currently at over 70% revenue CAGR. So what's my game plan with HIMS? Well, HIMS is currently at 5% of the Independence Fund at an average price of $30.23 per share. HIMS is currently trading at $50 per share, so we've had a very good rally since the beginning. The current plan is to slowly continue building the existing position, but we already have a 5% of the fund, so we don't see a need to push it anymore. In our opinion, we will have a good long-term buying opportunity under $45 per share, so if we see the company under 45 again, we'll probably start adding a little bit more, but at a slower pace since we already have a 5% of the fund anyway in it. Just some considerations. Currently, HIMS is rated as a speculative growth BBB rating, which is the highest investment grade a company could have before being an A type of company, which would be a quality investment grade. On that regard, I'll be having another video eventually in which I discuss the different rating levels that we use in the fund and what type of company or reasoning we will have for selecting one on another rating. What do we see in HIMS? Well, HIMS has a great potential. Again, we will have more videos in the channel discussing a little bit more about HIMS, the different verticals HIMS is doing, and explaining more in detail the business model of HIMS. This is just an introductory video on HIMS. And HIMS has some legal risk with Novo Nordisk, although this is highly speculative. Some people say, you know what, it may be dissipated now, it may not be dissipated, it may come back in the future, we will see. We will need to keep taking a look at it and react accordingly. So because of that, I see good prediction on how earnings are going to be looking in the next few years. HIMS management indicated $6.5 billion revenue by 2030, which is very, very big. But there is some uncertainties in terms of weight loss, in terms of Novo Nordisk's potential litigation. We will need to keep an eye on that closely. And just to end, just a disclaimer, this is not financial advice. And please, this is our first chapter in the YouTube project. Please let us know if there is anything we can do to improve sound quality, content, whatever you think we could be adding. Please let us know. We will be listening to you and applying that accordingly. Thank you very much for listening.